Forex can be very simple, at the same time very difficult, depending on how we choose we want it to be. So you've been hearing keep it simple, keep it simple. When you keep it simple, Forex will be very, very simple for you. But when you keep on jumping from one strategy to another, then you are going to be giving yourself a whole lot of problem. But at the end of the day, so long whatever you choose is making you money, then everything is cool. So today I'm going to be teaching us a strategy in trading forex, and is one of the simplest strategy ever, which is the smart money concept. And before we dive into the money concept, in this part we are going to be looking at the market structure. The truth is, everything we are doing in trading is basically looking for a support and a resistance. You have to know that support and resistance is what we are looking at in trading. So we are looking at the support region whereby we want to buy, and a resistance region for us to sell. So just like looking for a demand zone where we have all orders that is being accumulated so that we can buy, or a supply zone so that we can also sell. But I'm going to go deep into that. But now I want you to know something. You can win as much as possible trade as you want to win, or lose as much as possible trade as you want to lose, by just keeping your strategy very simple. So today I'll talk about the market structure. Market structure is very important in trading. Like, if you understand the market structure, then you are going to see a bit of difference in your trade, in the trade you are taking, and how you are winning those trades. You are going to see this difference. So market structure is very important. But before we dive into market structure, I want us to look at various trends that we have in trading, various trends we have in the charts in trading. Let's look at the various trends. One, we have three types of trend, like three major types of trend, which is the uptrend, the downtrend, and also the raging market. So we have when the market is moving in an upside, like trending up. We have when the market, this is like example of market trending up, forming series of higher highs and higher lows. And we have when the market is trending down. That is when you see market forming series of lower lows, lower high, lower lows, lower high. And I have this in one of my videos, so I'm not going to go deep down into this. You can also check this. And we have when the market is ranging, or when the market is moving sideways, like going up and down, going up and down, just something like this. You will see this in the chart. We'll also try to check the chart for all these examples. Now, let's look at what exactly is happening, because when you look at your chart, you should be able to tell what is happening in your chart, how you can read all this. So now let's try to read what is happening when the market, or when the chart, or the price is trending up. Now we can see an impulsive movement, then we will see a price correction, then following by another impulsive movement, price correction, another impulsive movement, price correction, and so on. Now, this is showing us that this market is trending, is going up. What we mean by this thing is trending up is all we can see is uptrend, and this thing is similar to the downtrend. Now, when market is forming this pattern, there is something the market is leaving behind. There is a message the market is passing to you, to all traders out there, that okay, this is what is happening. Now, this is the message the market is passing. Remember, we have impulsive movement, a correction, impulsive movement, correction, impulsive movement, correction. Now, in every this thing, you are going to see this is a structure. When you see this and this is a structure. The market is forming a structure, then a correction. Then we can see this impulsive movement breaking this particular structure. That is why here you are going to see, maybe you've heard of break of structure, or break of structure, change of character. So yeah, this is a break of structure, meaning that this structure has been broken. A break of structure here, I can name this. So this is a break of structure here. A break of structure here. Now, after the structure has been broken, we have the market forming another higher highs, then coming back down with a correction, forming higher lows. Why is this higher lows? Remember, this is higher lows, this is higher lows. Why is this higher lows? Because this low is higher than this. That is why this is also an higher low. This up low is higher than this. This is also an higher low, and so on like that. So this is I explained this in the previous video also. You can, and in one of my videos also, you can also check that. So this is how market is moving. Now, how do you take this trade? What do you want to look for whenever you are taking this trade? Remember, what we do in trading is just mainly buying and selling. What we do is buying and we sell. We want to buy and we want to sell. Now, as a buyer, when you want to buy anything, where do you want to buy? Do you want to buy at a higher value or you want to buy at a lower value? And do not forget, what we do, forex trading is just like exchanging of currency for the aim of making profits. Now, I want to buy euro. I want to buy this currency with the aim of me making profit. So where do I want to buy? It's just like you are a seller. You are selling some goods. Let's say you are selling a t-shirt. Now, if you are selling a t-shirt and you have a store, maybe a store where you do buy your t-shirt at wholesale value, and they are selling 12 pieces of t-shirt for you for like $10,000. Let's say they are selling 12 pieces of t-shirt for you. Let's use $100. They are selling 12 pieces of t-shirt for you $100. And you have another store where they are giving you the same quality, the same brand of that t-shirt for $90. Which one will you go for? Because you want to make profit, if you should go for the one of $100, let's say you are selling at a value of 110, because you are making $10 as your own profit. If you go for the one of $100, definitely when you are going to make profit, you will only be making $10 profit. But if you buy from the store that is selling for you $90, then you'll be making $20 profit, and higher profit. So whenever you see a market trending up, do not be moved because of this impulsive movement that you see that the price is going up. You know what you need to do? Wait for a correction. The correction is very, very important. It is just like you being on a bus stop. You want to take a bus or you want to take a taxi. On getting to the bus stop, you found out that the next available bus or taxi has moved already. Will you now start running after this bus, or you are going to stay at the bus stop and wait for another one to come so that you can jump in? It doesn't make sense when you start running after this bus because you want to jump into the bus or a moving train. You cannot jump into a moving train. Just hold on. And do you know what happens when you try to jump into a moving train or a moving bus? There are so many things that might happen. There might be an accident. You might jump down. You might even injure yourself. So many things will happen. But the best thing you have to do is to wait. That is why these corrections are very, very important. Whenever you see a structure like this, market moving up, coming down, moving up, coming down, what you need to do is to calm down. Wait for the correction. Wait for the correction. This is impulsive movement. You can see a correction back here. This, another impulsive movement, another correction back here. When you see another impulsive movement, if you are not able to buy at this correction, because where you want to buy is at the bottom of every correction. You want to buy at the bottom of every correction. So if you are unable to buy at this correction level, and you maybe on getting to the market, you've seen something like this, just wait for the market to go up. Then hold on for it to come back to the next available support. The next available support, which is here, then you can trigger your buy and take it up. It is very simple. Now let's go and look at the real chart here. Let's go and look at the real chart. So I'm going to break this video in several parts so that we are going to have good understanding on this. So I'm going to go on the higher time frame right now. So you can see this from both higher, lower time frame, or any time frame, or any currency of your choice. We can use whatever currency we want. We can use whatever currency we want. So this is Euro USD. We can also use this as we want. So now let us go back and see, okay, we can use this example. This is something we can also use. Now look at what is happening here. So easily you can plot when the market is going up. This is overall trend of Euro USD. So for you to see the trend of Euro USD, you have to, oh sorry, I have some analysis here. We need to use a clean chart. So let me clear every lines here. So yeah, so that we can have a clean chart. So you can see how the market has been moving. Easily you can see this market has been trending up. So what you need to do is now is for you to try and get hold of a particular structure. Now this market has been trending up. You need to know where your structure is going to start from. You need to understand where is your highs, where is your lows, and so on like that. You know, we are looking at the uptrend, this market trending up. Now, where is your highs, where is your low, where is your break of structure, so that you can know where and where to buy next. So I can just use this as an example. So we have this here, look at this here. We have this here, this market moving from here, let's say this is the low here, forming a high here. You understand? Then another low here. Then we have this forming another high here. Now look at what happened. There is a correction here at this place. What is here? This is a support region here. This is a support region here, and that is why you see the market trying to maybe form another low here from the correction, then go back up. Now, how do you know when the market is forming a low? How do you know the point, the correction point, the end point of the correction? Now, for you to know the end point of the correction, you are going to see something like this. You know, when you have the market going here, this high here, let me show you something. What you just do is I won't go much in the chart, but I will show you something here so you can get hold of it. When you have something like this and you have your chart coming back to this point here, one thing you should know is this market now is now showing you pattern of this thing is going up. So what you do here is you come here, you take your horizontal line, you put your horizontal line here, because this point here, which serve as a resistance here, and you can see upon the market coming down here, breaking up this resistance here, this resistance immediately turned a support for this market coming down here. Now, upon seeing something like this, let's say you enter the market looking at a structure like this, what you need to do is to come here and also put another horizontal line. So now you wait. What you are waiting for is you expect this market to break through this structure here, to break through this resistance zone here. Is a structure, is a resistance zone. So immediately we have this market breaking through this resistance zone here, then you are going to wait for a retest. You wait for a retest. Now, you know you've marked your horizontal line here, so this is a point. This is the point. This is the point where you are looking for your buy. So you are expecting, because of this region here, you are expecting here should be a support. This has served as a resistance before, and we have a breakthrough out of this resistance region. So now you are expecting this region now should serve as your support. So you are looking at you buying at this region. It is very simple. You can take your time and look at every market structure. Just try. So you'll be looking at to buy at this point here. Your first TP1 should be here. Your first TP1 should be here. Your stop loss should be before after the previous low. You should just put it below the previous low. Your first TP is going to be here. It's going to be this resistance zone here. Why you can target above as your TP2. Why I say this resistance zone here is because on the norms you are meant to mark out here. So this is another next resistance zone, which is a very good place to take your profit when you are trading. So you can take your profit first here, and of course you know this is going to break down. You can look at what has happened in the previous area and see where there will be the next resistance zone before this is going to form another correction. So this is very clear on how you can trade with market structure. So I'm going to break this video. Remember, we are still going on how to trade demand and supply, that is trading the SMC. So but now is the first lesson of market structure, which is the uptrend. Watch the next video, which is going to be the part 2. Then we talk about the downtrend, the ranging market, and we'll move to the main game. All right, guys, see you in the next class.